A quiet revolution is taking place, and it's completely changing how an entire nation handles its money. We're not talking about some far-off future here. This is happening right now on the streets of Nigeria. And it all starts with something we pretty much take for granted vanishing: the local bank branch. So let's dig in and figure out what's really going on.
Just look at this number for a second. 229. That's how many bank branches literally shut their doors for good across Nigeria in just 1 year. That's not a slow trend, folks. That is an exodus. And, well, it leaves us with one massive question.
So, is this it? Is this the beginning of the end for traditional banking in Africa's biggest economy? Is the whole system just collapsing? Well, the real answer is way more complicated and, honestly, a whole lot more interesting than a simple yes or no. See, this isn't really a story of collapse. It's a story of a radical evolution.
Okay, so let's start by unpacking these closures that are grabbing all the headlines. What we're actually seeing is this huge recalibration. Banks are having to make a really tough choice: adapt to survive or stick with the old ways and just become obsolete. Those marble halls and long lines are being swapped for something much faster, leaner, and way more efficient. So, you have to ask, why is all this happening right now? Well, it's not just one thing. It's more like a perfect storm of 4 key forces all hitting at once, pushing that old model right to its breaking point. Let's take a look behind those closed doors.
First up, and this is the big one, is the digital migration. The central bank has been pushing for cashless policies, and with the absolute explosion of smartphones, Nigerians just aren't willing to stand in line anymore. Why would you? You can tap, swipe, and send money from your couch, your office, wherever. Convenience is now king.
The second driver? It's just pure economics. I mean, running a physical branch is unbelievably expensive. You've got rent, you've got utilities, security, all the staff salaries. It adds up really, really fast. And when you have fewer people walking through the door, the math just doesn't make sense anymore.
And then there's the security angle, which is actually pretty surprising. We tend to think of banks as these untouchable fortresses, right? But in reality, they're vulnerable to armed robbery, to internal fraud. Digital platforms, on the other hand, with all their encryption and real-time alerts, they're often much, much safer for both the bank and for you.
And finally, you've got this push from the regulators themselves. They're mandating all these system upgrades to fight fraud, which is great, but these upgrades often require downtime, and during that downtime, the branches are totally useless. So what does that do? It forces customers to use digital alternatives, like their banking app or even simple text-based codes. And the crazy part is, once people make that switch, a lot of them, they never go back.
Now, this massive shift didn't just happen in a vacuum. While the traditional banks were starting to stumble, a whole new kind of players stepped into the ring. And I'm talking, of course, about Fintech, these tech startups that are just completely rewriting the rules of finance.
And honestly, the difference between these two is just night and day. Banks, they're limited by their physical location and their opening hours, with super high costs and slow, manual processes. But fintechs, they're 24/7, they live right on your phone, they have almost zero physical costs, and their services are instant and super intuitive. It's a classic David versus Goliath story, except this time, David has a supercomputer in his pocket, and you can see exactly who's winning over the next generation. The data is crystal clear. Nigerians between 18 and 35 are overwhelmingly choosing fintech platforms. This isn't just a small trend. It is a demographic tidal wave that is literally defining the future of this entire market.
And if you need just one killer stat to prove the point, here it is. Back in 2023, there was a massive cash shortage. ATMs ran dry, banks just couldn't keep up. And during that time, electronic payments surged by over 45%. And who do you think powered that surge? It wasn't the old guard. It was the fintech platforms that stepped up and basically kept the whole economy moving.
But hold on, because this story isn't just about slick apps and digital payments. There's this hidden human layer to this revolution that is, arguably, even more important. This is the story of the real unsung heroes of this whole transition, the banking agents.
So, what even is a banking agent? Well, it's definitely not a banker in a suit. It's your local shopkeeper or the person at the neighborhood kiosk, maybe a small trader with a simple point-of-sale machine. They are the human face of digital banking, offering all those essential services right there in your community.
I just love this quote from an industry analyst. It captures their role so perfectly. They are the capillaries delivering financial oxygen. Think about that. While the big bank branches, the arteries, are closing down, these agents are the tiny little vessels that are keeping the most remote parts of the economy alive. And why does this matter so much?
Well, because over half of all Nigerians still don't have access to a formal bank account or a branch. So for them, the agent down the street, that's not just a convenience. It's a lifeline. It's the only bank they've got.
So, the key takeaway here is that we are in the middle of a massive and kind of messy transition. The old system is fading away, and this new one is being built in real time. The big question is, how do we make sure this new system actually works for everybody? Well, here is a 6-point plan for how to do just that. The blueprint is pretty clear. First off, we've got to supercharge that agent network, get these human touchpoints into every single corner of the country. Second, all these different apps and bank platforms have to be able to talk to each other seamlessly. That's what we call interoperability, and it's totally non-negotiable. Third, we need a huge push for digital literacy, so people know how to use these new tools safely and feel confident doing it. Fourth, you need smart regulation that protects people without killing the very innovation that's driving all this change. Fifth, banks should start thinking about smaller, hybrid express branches that actually support the agents, not try to replace them. And finally, by relying on local Nigerian tech, you cut costs and build a stronger financial system from the ground up. So, let's circle all the way back to our original question. Is Nigerian banking collapsing? No, absolutely not. The closure of 229 branches isn't a crisis, it's a correction. The future isn't about having no branches at all. It's about being branch smart, using tech, using agents, and using smaller hubs to serve people better and more efficiently than ever before.
And that really leaves us with this final thought. As this evolution keeps going, not just in Nigeria, but all over the world, the challenge is always the same. How do we build bridges between the digital and the physical worlds, between the old and the new, to create a financial system that actually includes everyone, instead of just building new walls?